Well, today's auto sales numbers have certainly been a mixed bag. Ford's July sales fell short of estimates, while Japanese automaker Toyota is boosting its profit outlook. Well, to break it all down for us and for some inside color, I'm joined now by IHS Automotive's Rebecca Lindland. Rebecca has over 15 years of automotive industry experience, and she's joining me now from Lexington, Massachusetts. Welcome, Rebecca. Pleasure to have you on. And I gotta put this in context. You and I were just talking during the commercial break. You know, are the auto execs paying close attention to what is happening in Washington and how it may impact their business?
They are watching it very closely. I just had a meeting last Wednesday in Detroit with a senior level executive from one of the big manufacturers, and he asked me very directly, what is going on with the consumer and how are they feeling about the debt crisis? And I think it's very clear. We're seeing an increase in the savings rate, and we are seeing very, very lukewarm auto sales. We're looking at maybe getting to 11.8 million units for this month, seasonally adjusted, and that's just a very weak number. We need to start getting into the 12s, and we can't get there yet.
Rebecca, 2011 was supposed to be a big year for automakers. Then we had events in Japan, certainly, that led to a lot of supply chain disruptions. Then we started getting numbers indicating that perhaps the economic recovery wasn't as strong as expected. What are you forecasting now? Do you think the numbers are going to come much lower? Are we going to start to see a lot more guidance coming out of the U.S. automakers in particular that suggests it's going to be a significantly weaker year?
We are seeing that. Our forecast in January was around 13.3 million units, and we did lower it after the Japan crisis to 12.9. Now we're at 12.7, and we just had our economic meeting that we have the first business day of every month, and it looks like we're going to be lowering our forecast for 2011 and for 2012. We're seeing just weaker GDP numbers, and we're seeing that consumer just not having the confidence to spend, literally the confidence to go out on a weekend and buy a new car. And this is dragging down the economy overall. We're seeing it in housing. We're seeing it just all throughout. It's very unusual, too, because normally the U.S. economy, there's a lot of resiliency there, and there's a lot of optimism. And we're just not feeling that from the consumer yet.
Rebecca, really quickly, of the numbers that have been released thus far on July sales, you know, it looks like there were some bright spots. I'm looking at some data here. Chrysler Group, July total U.S. vehicle sales up 20%. The estimate was up 15%. There were also not so bright spots. What are you watching closely of these numbers?
We're coming in pretty close right now. We actually underestimated Chrysler, but we were right on target with GM and with Ford. We have also seen great numbers from Hyundai and Kia. They continue to do very well. And from the luxury market, because luxury buyers aren't buying big houses with their bonuses anymore. They're buying luxury cars. So it's their version of downsizing.
And then very quickly, Rebecca, are you paying close attention to GM's earnings? They come out, I think, August 4th.
They are, and we're hoping to see some positive news there. The company was able to restructure, of course. They've been able to shed brands, and they've had some really great product launches. So all of those things should factor in to a pretty good earnings result.
All right, Rebecca, we have to leave it there. Thank you so much for joining us today.
Thank you.
That was Rebecca Lindland of IHS Automotive with some interesting insight on the auto industry.